So you're wondering if stocks might go down next week, or might they go up? And you're not sure whether you should hold your trade over the weekend, or whether you should trade in or hold your trade at all. Where will the markets go next week? Where will Forex go next week? Where will the commodities go next week? We're going to go and discuss that today. We're going to go to the charts and we're going to do some technical analysis. I've been trading for 30 years. This is something I've been doing for years and years now. At the end of the week, go over what happened last week, go over your journal and think about what might happen next week. And then take the weekend off and enjoy it. Have a relaxing weekend. Come back on Monday morning ready for the markets and let's get going. Will the market crash next week or will it stay up? Can we predict the future? Do we know what's going to happen? Well, guys, that's why I always say the stock market is a 50-50 game. Sometimes it goes up, sometimes it goes down. It's a 50% chance that you've got when you take a trade that you could win, and there's a 50% chance when you take a trade that you could lose. Imagine that. Now you'll say to me, but if I've got a strategy, or I've got this strategy that you're giving me that we're using, surely I should be winning 7 out of 10 trades. And yes, you're right. With a good strategy, you should be winning more than losing. But the problem is that everybody tells you that you will win more on their strategy, that you'll turn $100 into $1 million. But if you don't know how to apply that emotionally and psychologically, there's no way that you're going to make a win. And the reason for that is it's about losing less on your losses and making more on your wins. Every single trade you take, no matter how good your strategy or how brilliant your strategy or who gave it to you, there's a 50% chance of winning. And that's as good as it gets, because the market's made up of buyers and sellers. And we're going to get to that after we've been to the charts. We're going to talk about the 50-50 trading after we've been to the charts. And we're also going to talk about your free gift that we've got for you there. And we're going to talk about the fear and psychology of trading. But after we've had a look at the charts and we've had a look at what might be happening next week. But first, don't forget, guys, trading is a risky game. Trading is risky, and 80% of traders, up to 80% of traders, lose money. And if you don't like risk and you don't like losing money, then you probably shouldn't be trading. This isn't the game for you. This is for guys that are prepared to take that risk. This is a risky game. That's what it's all about. Let's go and have a look at the charts. Let's go and have a look at what I see for next week. Get my crystal ball out, little crystal ball, and we'll have a little look. And then we can talk about the fear and the 50-50 in the markets. Check the charts out, guys. We're looking at our trades and we're wondering where the market's going to go next week. Great British pound US dollar has been on a bullish trajectory for quite a while now, and it's developed this little head and shoulders at the top. I still think it could go long, and I think we're getting a long trade out of it, but it could also go short. Hey, it's the weekend, guys. I hope you're enjoying it. I hope it's a wonderful week that you had last week. Let's see what the markets look like for next week. Now, just to, the favorite is the US 500, SPX, SPY, whatever you want to call it. Everybody's got their own product on this, and I just use the US 500 as a general symbol. I often use the SPX as well. Very much the same thing. The NASDAQ and the S&P will run pretty close to each other, so I'm not going to bother with the NASDAQ, but just bear in mind, if you are trading NAS, that it's all technical stocks. So, NVIDIA's results and that sort of thing will play a big part in that. Whereas the S&P 500 obviously includes everything else. Now, I'm looking at the S&P 500, and one of my main concerns on this particular product is, of course, these long red bars that keep occurring at the resistance. Every time it hits the resistance, it gives a long red bar down, so straight down. And bearing in mind, this is now a 4-hour chart. And then you get these little crows building up, and then it comes down again. Get these little ones building up, comes down again. So there's a lot of selling pressure off of this resistance. Now, I would like to think that this is a flag pattern and there's a continuation to come when it breaks through this resistance, and there's a very strong possibility of that. But the overarching macro picture in the markets at the moment is the world still is in debt. It still isn't great, and things aren't as rosy as they're painting the picture to be. So be very careful of the money flows and the debt and what's happening in the world as we stand, because this market has run strong. I look and I trade what I see. And what I see here is this is possibly going to break through the resistance and go long. But if we get continuation of these long red bars dropping off this resistance level here, there's a very good chance that this could break to the downside, giving us a downward swing. I think it might be running out of steam. Trade what you see. What I see here is if we get a couple of red candles going down, I'll look at short. If we get a green candle out of this resistance, I'm going long on this particular product. That is for sure. If you go to the DAX and we look at the DAX, this also looks like a long trade, and it looks like a long trade already. It's hit this resistance, it's broken through this resistance, it's retesting this and turning it into a support. There's a very good chance that this is going to be a nice long trade. It was a long time ago when we were looking at a short on that. It didn't work. Okay, so this definitely looks like it could continue on a very long trajectory. So if you're looking at the DAX, not a bad trade for a long trade. Also the France 40. A lot of people have been calling the France 40 as a short. I can't see the short here. If you look at the market structure, look how nicely the market structure has been in the bullish mode going up. Yes, it might develop a double top up here, which is pretty tricky, but I wouldn't take a short on this particular item right now. In fact, I would rather look at taking a long trade around the support area, which is 75.66. If it comes back there, take a long trade up. For me, it's not short yet until it's broken the structure. So while I say the markets might go down next week, that's not necessarily so. It does look like it could remain pretty much on a long trajectory for now. But if you see a break, because everything has been going for so long, then be aware that things could change rather drastically. Now, gold trade didn't work out for me last week because it broke trend. But the one thing I didn't see, and I did see further on, is that we have an ascending triangle. An ascending triangle, if it breaks out of this ascending triangle, it should break to the upside. So while it looks like there's all these double and triple tops up here, an ascending triangle, it's getting smaller and smaller and smaller. It's most likely going to break to the upside. So this is going to be a pretty good long trade further. So while gold looks like it's at its all-time highs and there's no chance that it can go further, we've said that before, when it's at other levels like 24, 22 and all the rest of it, just remember ascending triangles tend to go long. So as far as gold goes, I'm still bullish on gold, even though it wasn't a great trade last week and I could have actually done better with it. It's a rookie mistake that I actually made getting out too early. I will look to take another long on this, especially if it breaks this level, because that is a serious long if it breaks that level and goes out of this ascending triangle. So that's pretty good for next week. That looks pretty reasonable and it looks like something that might happen. And then there's Brent crude oil, one of our old favorites. Brent crude oil. What shall we do with Brent crude oil? And we'll just have a look here. Let's just see. Trend line down, and Brent crude could actually come up to this level, hit it there, and then back down short, or it could also break through the level here and go on up to the resistance and come down from there. This resistance seems to be pretty good on Brent crude oil at the 81.50. It's hit it there, it's hit it there, it's hit it there. So it's hit it a number of times, but there is also a trend resistance which is now developed in here, which you can look at as well, and it could be just dropping off. But yeah, it's a cyclical stock. All commodities are cyclical. They go up and they go down. So you cannot call a cyclical stock as it's going to go all the way down or it's going to go all the way up. So for the time being, Brent crude is going down, but over the long term, this could turn around and go up. There's a heavy support down here at the 75 level. So that could be a very, 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 very strong support to break. There's a good chance that Brent crude could turn around, break through the resistance and carry on going up. But for now, trade. What you see looks to me like a short trade off of these levels, either that level or the main resistance at the top. I would probably wait and see what actually happens at this level. If you get a nice red candle down, then you can go short, or wait till it gets to the main one and see how we go. So yeah, that's what I see for next week. And like I said, US 500, bit tricky to call at the moment, because as I'll say, these long red bars are worrying me. And that's why I say it might just give up next week. It might just say, well, I've had enough. I think it's time to go, because what it's fooling us with at the moment, or it could be genuine, it looks like a good flag pattern. It looks like it's gone straight up, it's consolidating, and then it carries on going, which is the norm. But I always grow concerned when I see these tops, and then I see these long red bars off the tops every single time. That gives me cause for great concern on a long trade here. If I was to take a long trade, I would wait for it to break through here, give me a nice green bar, and then I'll go for the long trade. So that's the charts. That's what we're looking at next week, and that's our feeling for the week. But, you know, it's so difficult to take a crystal ball and say, oh, the market's going to go that way. Oh, the market's going to go that way. Because as I said to you, it's a 50-50 game, because the market's made up of buyers and sellers. In other words, all the buyers believe the market's going to go long, and all the sellers believe the market's going to go short. And every single one of those traders or investors believe that they've got the edge. Obviously, otherwise they wouldn't be trading, guys. They wouldn't be out there trading against you if they didn't believe that they had a better edge than you. And that's what makes this game a 50-50 game. You know, most of the wealthiest men in the market and the stock market aren't doing day trading. They're actually investing. In other words, they're taking money. And let's say if you're a young guy, I mean, even if you're an old guy, I still do it. But even if you're a young guy, even better. Because if you can take a little bit of money, if you've got a lump sum, obviously start out with a lump sum. But if you've got a little bit of money that you can put into the market every single month, just a little bit of money, and you can add it to say 5 shares, 10 shares, do it in equity, obviously not geared trading, and you can put that investment away. In 10 years time, you're going to be so happy that you did that. In 20 years time, you're going to be so rich you won't know what to do with the money. And this is the point. The point is, and over that period of time, can you imagine that if you've got good dividend paying shares as well, you'll be earning like 6 to 8% per annum off your investment as well, on top of it, that you can either put back in the investment or you can spend it on Christmas or whatever you spend it on. You know, have a bit of fun with it. Don't overlook investing as something that you need to do with your trading. Yes, your trading is important, and it's great to know the markets, and it's great to have it as a career. And just bear that in mind, guys. This is a career. This is not something you learn in a day. It's not like you can't learn to be a doctor in a day. You can't learn to be a lawyer in a day. You also cannot learn to be a good trader in a day. Why so many people tell you that you can take $100 or $1,000 and turn it into $1 million in a week, and why anybody thinks that's possible is actually mind-boggling and beyond my capabilities of thought. Because you just can't learn to do these things in one day. This is not a game of luck. It's a game of, there's a lot of skill involved in getting that edge and getting that strategy right, but it's about the psychology. And that's what I said I'm going to talk to you guys about, a little bit about the fear, because the psychology of trading is all about fear. What we tend to do is we tend to follow those losses. We tend to go, oh, I'm losing, I'll double up, and when it breaks even, I'll get out of the trade. And it's kind of like hedging, and I'll be free to go. And well, it might work once or twice, but guess what? Doesn't work every time. It never ever works every time. And that one time that it fails, it could break you. Be very careful of that. But not only that, if you did win 7 trades out of 10 and the 8th one did that, you've lost. You've lost in the market. The whole strategy is out of the window. And the worst fear is when you're winning and you've got a tiny little profit, but you're so scared to lose that profit that you jump out of the trade. Why do you do that? You jump out of the trade instead of, let's say you'd started the trade and you put your stop loss 20 points away from your entry point, right? And now hear me, listen to what I'm saying here, understand what I'm saying here. Now your trade goes into profit by 20 points or more, close to it, and you jump out of the trade. Why'd you do that? Just take your stop loss, move it up to 20 points. You're still 20 points away. You're still 20 points away from your price. And if it loses, you break even. Okay, so bummer, you didn't lose lose anything, did you? And why do you think you've actually won anything yet? You haven't won anything yet. Now your stop loss is up there, you break even, let the trade go a bit further, trade goes a bit further, maybe it moves another 20 points, move your stop loss up again, or add to the trade and move the stop loss up some more, scale it up. Look at some of my previous videos. I'm actually showing you guys how to scale up your trades instead of scaling down your trades. And this is the problem with fear. The fear of losing money is immense, even if you don't have it. Even if you haven't won it yet, you go into a profit and you think, ooh, I better get out of that trade and take that little profit because a profit's a profit. No, it isn't. The basis of trading, do this, guys. Decide for yourself, this week I'm going to take a $500 loss on every trade. That's it. And that's the max. But I'm going to make a $1,000 profit on every trade, at least. That way, if you lose 5 and win 5, you're making a decent profit, guys. You're making a really good, strong profit. So, but don't go over that amount unless you're adding to a winning trade. If you're adding to a winning trade, then you're changing your risk, but you've also moved your stop loss up. Keep your stop loss at a maximum $500 loss and make the win bigger, and just keep on doing that. That way you can only lose $500 on a trade. Look, to lose 10 trades in a row, you got to be really unlucky. Let's be honest. It's got to be a really bad run. And I've actually got a little policy that if I lose 3 trades on a day, I walk away and come back tomorrow. I'm not going to carry on trading that day because clearly my psychology is not right on the day. There's something wrong. Because guess what, guys? I'm human. I make mistakes. I do things wrong. And quite often I lose trades. And it's because I have a bad mindset on the day, or something might be wrong, or maybe I'm just not thinking the right way. I'd rather go and sleep on it, come back the next day with a fresh outlook, and have a better day or a better week, or whatever that might be. Sometimes I'll shut down an entire week of trading. I'll actually walk away from trading for the entire week and say, well, this is just not my week, and walk away and come back next week, because I know my mindset's not right, and I've got to get my mindset right before I can take profitable trades. Becoming a good loser has a lot to do with becoming a good trader. If you're a 50-50 trader, you own the market because you can make a profit. That's as simple trading gets. I forgot, guys, free gift. Gotta give you a free gift. I told you I'd give you the free gift. The free gift, go down to the description, get your free Forex book. It's a PDF, totally on the house, all yours. Go and enjoy it. It's not trading advice, it's just a trading idea, and it's there for you to get an idea of why you should trade with trends and how to trade with trends. Don't forget, I've got the trade of the day out every single day on the secret blog. It's just a trading idea as well. It's not trading advice. It's there so you can see what I'm trading, and if you think your trade follows along the same lines or the same patterns, and if your trading's working out for you. Because I always found over the years that it's good to see what other people are doing, and then you know if you're on the right track or the wrong track. Because if the majority is going along that way and you're going down that road, either you're a genius or you're doing something wrong. There's a thought for you guys. So with that, the members, obviously they get a little video every day, and they get the list of which way I think market's going and that sort of thing. And I'm thinking of adding a few other things to that. So if you're interested in membership, just join. It's a YouTube thing. The button's below the video. But guys, I don't forget to come back on Monday and watch the next video, which is about the most accurate buy and sell indicators. Now, you know I don't trade with indicators, but in this particular event I am showing you, because a lot of you guys actually do trade with indicators, and I don't advocate changing your system every 5 minutes. If you've got a system that's working for you, please stick to it if it's working. That's the big thing. And if you don't, then great, use the system I'm putting forward. But for me, it's all about the strategy, and it's all about the psychology at the end of the day. But we're going to talk about the best buy and sell indicators and the most profitable ones around on the market. So come back on Monday for that. Don't forget to watch the last videos. Thanks for watching, guys. Cheers, thanks, and bye.